If you're an Australian pensioner and you have recently moved money between your bank accounts, transferred funds to a family member, deposited a lump sum, or withdrawn a large amount of cash, please stop for a moment and listen carefully. Because what I'm about to share with you could be the difference between keeping your full age pension or receiving a letter from Services Australia next month asking you to explain every single transaction in your bank account for the past 2 years. I know that sounds frightening. I know your heart might already be beating a little faster, but I want you to take a slow, deep breath because fear is not going to help you here. Facts will. And the facts in 2026 have changed in ways that most pensioners have not been told about. Quietly, behind the scenes, the Australian Taxation Office, AUSTRAC, and Services Australia have built one of the most powerful data matching systems this country has ever seen. And right now, in the year 2026, 7 specific bank account moves are being automatically flagged the moment they happen. You are watching Centrelink Daily AU, the channel that gives you the calm, plain English truth about Centrelink, the age pension, and your retirement, without the panic and without the politics. Today, I am going to walk you through those 7 moves slowly and carefully, so that by the end of this video, you will know exactly what to do, what to avoid, and how to protect every single dollar of the pension you have earned. Let me say something to you very gently before we go any further. You have not done anything wrong. Most pensioners watching this have lived honest, hard-working lives. You paid your taxes, you raised your family, you contributed to this country for 50 or 60 years. And the very last thing you deserve in retirement is a letter from Centrelink accusing you of hiding money. But here is the hard, confirmed truth. In 2026, the system does not wait for accusations. It flags transactions automatically. And once a transaction is flagged, a human officer eventually reviews it, often months later, sometimes a year later. And by then, you may have forgotten why you moved that money in the first place. Here is the confirmed fact, straight from the source. Under Australian law, any cash deposit or withdrawal of $10,000 or more must be reported by your bank to AUSTRAC, Australia's Financial Intelligence Agency. This is called a threshold transaction report, and it happens automatically, without anyone telling you. A AUSTRAC then shares that information with the Australian Taxation Office. The ATO then cross-checks it against your declared income, your tax return, and, critically, against the income and assets you have declared to Services Australia for your age pension. If there is a mismatch, you get flagged. It really is that simple and that powerful. Now let's talk about what actually changed in 2026, because this is where most pensioners are being caught off guard. For many years, this data matching existed in theory, but the systems were slow. A bank might report a transaction, the ATO might receive it months later, and Services Australia might never see it at all. That has changed completely. From the 20th of March 2026, the data flow between AUSTRAC, the ATO, and Services Australia became near real-time. From the 1st of July 2026, the income thresholds used by Centrelink to assess your pension were tightened and updated, which means smaller discrepancies now trigger reviews. And from the 20th of September 2026, the next age pension indexation cycle brings further changes that I will explain in just a moment. The Australian Taxation Office's own website confirms that data matching programs were significantly expanded in 2026, covering bank accounts, share registries, property settlements, cryptocurrency exchanges, and overseas transfers. Services Australia confirms that any change to your income or assets must be reported within 14 days. Put those 2 facts together, and you can see why so many pensioners are getting letters they never expected. Stop. Take a breath. Because I do not want you to close this video feeling panicked. I want you to feel informed and in control. The truth is that the vast majority of pensioners have absolutely nothing to hide and nothing to fear. The system is not designed to punish honest seniors. It is designed to catch genuine fraud, hidden offshore accounts, and undeclared income from people deliberately gaming the system. If you are simply moving your own money around for sensible reasons, you will be fine, provided you understand the rules and report properly. That is what this video is about. Not fear, but facts. Let me now walk you through the 7 bank account moves that are being flagged in 2026, one by one, so you know exactly what to look out for. The first move is any single cash transaction of $10,000 or more. This includes a cash deposit, a cash withdrawal, or a cash purchase of a bank cheque. The moment you walk into your branch and ask the teller for that amount in cash, or hand over that amount in cash, your bank is required by law to file a threshold transaction report with AUSTRAC. It does not matter if the money is your own, fully taxed, and completely legitimate. The report still happens. So if you are planning to give a grandchild a wedding gift, pay a tradesperson, or buy a second-hand caravan in cash, please understand that the transaction will be reported automatically. The second move is what the law calls structuring. This is where someone breaks a large transaction into several smaller ones to stay under the $10,000 reporting threshold. For example, withdrawing $9,500 on Monday and another $9,500 on Wednesday. I want to be very clear here. Structuring is a criminal offence under Australian law, even if the underlying money is completely legitimate. The penalties can include fines and imprisonment. Banks have sophisticated software that automatically detects patterns of transactions that look like structuring, and they report them to AUSTRAC. So please, never break up a large transaction to avoid the threshold. If you have a legitimate reason for the money, just do it in one go and keep your records. The third move is any international transfer of 10,000 Australian dollars or more, either coming into your account from overseas or going out. This includes pensions or inheritances from the United Kingdom, money sent to family in another country, or proceeds from selling an overseas property. These transfers are automatically reported, and the ATO is particularly interested in them because they may indicate undeclared foreign income or assets. If you receive a pension from another country, please make sure Services Australia knows about it, because foreign pensions are counted in the income test for the Australian age pension. The fourth move is unusual changes in your term deposit balances. If you suddenly close a large term deposit or open one with funds that do not match your declared income, the bank's internal systems will often flag the transaction for review. Term deposits are visible to the ATO and to Services Australia through deeming calculations. Remember, every dollar in a term deposit is considered a financial asset and is deemed to earn income at official rates, whether it actually does or not. From the 20th of March 2026, the deeming rates are 1.25% on the first $64,200 for a single pensioner, or $106,200 for a couple combined, and 3.25% on anything above those thresholds. The fifth move is transferring large amounts between joint accounts and individual accounts, or between your own account and an account in another person's name. This is one of the most common traps because pensioners often do this innocently. Perhaps you want to help a child with a house deposit, or you are restructuring your finances after the loss of a spouse, or you are simply tidying up old accounts. But Services Australia treats certain transfers as gifts, and there are strict gifting rules. You may gift up to $10,000 in any financial year, and no more than $30,000 over any rolling 5-year period. Anything above those limits is treated as a deprived asset and continues to be counted in your assets test for 5 full years from the date of the gift. The sixth move is unusually high interest payments arriving in your account. If your bank statements show interest income that does not match the assets you have declared to Centrelink, you will be flagged. For example, If Services Australia has you on record as having $40,000 in the bank, but the ATO can see you are receiving $3,000 a year in interest, the maths simply does not add up, and the system will notice. Please remember, even small online savings accounts report interest to the ATO automatically. The seventh move is regular incoming payments that look like business income, rental income, or undeclared earnings. This could be weekly or monthly transfers from the same source that suggest you are running a small business, renting out a granny flat, doing some casual work, or receiving income from a family trust. All of these need to be declared to Services Australia, even if you think they are too small to matter. The work bonus does allow you to earn up to $300 per fortnight from employment or self-employment without it reducing your pension, and unused amounts can be banked up to a maximum of $11,800. But the income must still be declared every time. Let's talk numbers now, because I want you to understand exactly what is at stake here. From the 20th of March 2026, the maximum age pension for a single person is $1,200.90 per fortnight. That works out to about $31,223 a year. For a couple, each partner receives $905.20 per fortnight, giving a combined household total of $1,810.40 per fortnight, or approximately $47,071 per year. These figures include the basic pension, the pension supplement, and the energy supplement. Now, here is why bank account flagging matters so much. The assets test thresholds, as confirmed by Services Australia, mean that a single homeowner can have up to $321,500 in assessable assets before any reduction to the full pension begins, and the pension cuts out entirely at around $722,000. For a homeowning couple, the full pension threshold sits at $481,500, with the cutout point near $1,085,000. For every additional $1,000 of assessable assets above the lower threshold, your pension reduces by $3 per fortnight, which adds up to roughly $78 per year, per thousand. Over $10,000 of extra assets, that is about $780 a year off your pension. The income test free area is $218 per fortnight for a single pensioner, and $380 per fortnight for a couple combined. Every dollar of assessable income above those free areas reduces your pension by 50 cents. If a bank flag uncovers undeclared income, this is where the real damage happens, because the pension reduction can be backdated, sometimes for years, and a debt can be raised against you. Now let me speak directly to you based on your age, because not every pensioner faces the same risk. If you are 60 to 64 years old, you are not yet on the age pension, but your bank transactions are still being tracked, and these records will be used when you eventually claim. If you are 65 to 66, you are inside the planning window, and now is the time to get your accounts in order before you apply. If you are 67 or older and already receiving the age pension, you are in the highest attention group, because every change in your income and assets must be reported within 14 days. And if you are 70 or older, please pay particular attention to large family gifts, inheritance proceeds, and any cash movements, because these are the most commonly flagged transactions for your age group. Here is the positive surprise that almost no pensioner knows about. Services Australia offers a completely free service called the Financial Information Service, or FIS. You can book a one-on-one appointment with a qualified financial information service officer who will sit down with you, look at your situation, and give you guidance on how your bank movements, gifts, and asset changes will affect your pension. It costs you nothing, not $1. You can book through MyGov or by calling Services Australia on 132300. I have spoken to pensioners who have saved themselves thousands of dollars simply by making one phone call before they move money around. This is a public service paid for by your taxes. Please use it. Now let me clarify a very important piece of confusion that I see in the comments on this channel every single week. The Australian Taxation Office and Services Australia are not the same organisation. Many pensioners assume that if they have declared something to the tax office, they have also declared it to Centrelink. That is not correct. The two systems share data, yes, but they have different rules, different thresholds, and different reporting requirements. You can be perfectly legal with the ATO and still be in trouble with Services Australia if you have not updated your income and assets within the 14-day window. Please always think of them as two separate conversations you need to keep current. And here is the trap to avoid. The single biggest mistake I see Australian pensioners make in 2026 is assuming that small transactions do not matter. They do. Modern data matching is not just looking for one big flag, it is looking for patterns. A series of $2,000 deposits over 6 months, a slow increase in interest income, regular transfers from an adult child, a single overseas wire from a relative, all of these can build a picture that triggers a review. The trap is silence. The trap is thinking that because no one has contacted you, no one is watching. They are watching. Quietly, automatically, and continuously. Let me put this all into the big picture context for you. Australia currently has over 2.5 million age pension recipients, and Services Australia processes billions of dollars in payments every year. The government has a duty, paid for by taxpayers, to make sure that money goes to the people who genuinely qualify. The expansion of data matching is not a personal attack on you. It is part of a broader modernisation, the same kind of modernisation happening in banking, healthcare and tax. The good news is that for honest pensioners who declare properly, this system actually works in your favour because it speeds up reviews, reduces paperwork and makes legitimate adjustments faster. The challenge is simply staying informed, and that is exactly why Centrelink Daily AU exists. So what should you do this week? Here is your action checklist in plain English, written for you to follow step by step. First, log into your MyGov account today, link it to Centrelink if you have not already, and check that the bank accounts, income and assets listed there match your reality right now. Second, write down on a piece of paper every transaction over $10,000 you have made in the last 12 months, and any gifts you have given to family, no matter how small they seemed at the time. Third, if you have any transaction that you are unsure about, do not panic. But do pick up the phone and call Services Australia on 132300 or book a free financial information service appointment through MyGov. Fourth, if you are planning a large cash transaction, an international transfer, or a major gift in the coming months, speak to Services Australia before you do it, not after. Because once it is reported by AUSTRAC, you cannot take it back. Fifth, keep all your bank statements, receipts and notes for at least 5 years, because that is the gifting look-back window and the same period the ATO usually reviews. And finally, please share this video with another senior in your life, a friend, a neighbour, a family member. Because the pensioners who get caught out by these rules are almost always the ones who never knew the rules existed. You can change that with a single share button. This is Centrelink Daily AU, and our promise to you is simple. We will always give you the calm, factual truth, no matter how confusing or frightening the headlines become. If this video helped you understand the new bank account flagging rules in 2026, please give it a thumbs up, hit subscribe, and ring the bell so you never miss an update that affects your pension or your retirement. Drop your questions in the comments below, because I read every single one, and your questions help shape the next videos on this channel. Remember, you have worked your entire life for this pension. You deserve to keep every dollar you are entitled to. The system in 2026 is faster, smarter, and more connected than ever before. But it is not your enemy. With the right knowledge and the right preparation, you remain firmly in control. So plan around facts, not fear. Stay calm, stay informed, and I will see you in the next video right here on Centrelink Daily AU. Take care of yourself, take care of each other, and we will talk again very soon.